Hello, everybody. My name is Miguel, and I'm with Shared Economy Tax, an accounting firm specialized in the sharing economy. And in today's video, we're going to look at QuickBooks Online, specifically from the perspective of an Airbnb host. Now, we use Airbnb as a general category. Of course, if you are in VRBO, there are going to be similarities that we can leverage from here or another short-term rental platform. But again, we're going to be focused on the Airbnb host. So when we talk about revenues and expenses, it's going to be specific to the Airbnb business. So keep that in mind as we go through this. Also keep in mind that if you have familiarity with accounting software already, this is going to be a basic overview of how to navigate from that perspective. So this is really for somebody that either has a bookkeeper already and just needs to see their account from the big picture. And it's also for somebody that's getting started that needs to know just how to get their feet wet when it comes to QuickBooks Online, and that would be specific to Airbnb. So with that, let's go ahead and jump right in. So when you log into QuickBooks Online, you should typically see a company dashboard like this. Now note that a company dashboard is customizable to show any key metrics that you're focused on. I should also say that from an accounting standpoint, talking about tax and management financials, we're not as focused on the dashboard summary as much as we are on the reports that we're going to generate. To the right-hand side, you'll see your bank accounts listed. This is really important because it indicates if you're reconciled, if you're caught up to date. We're not going to cover reconciliation in this video, but again, there are some valuable points you can see when you log in. I'm just saying that I tend to hop on over to the reports as soon as I get in. So let's go ahead and take a look at the reporting page. When you get here, you're going to see favorites. You're going to see custom reports and management reports. And I'll come back to custom reports, but the big two that you're going to see from an accounting standpoint, when you talk to your bookkeeper, when you talk to your tax accountant, these are the usual two main core items that you're going to produce for, say, a tax return or a bank. So end of the day, these are the big picture. There are other interesting reports here. I'm not going to get into that. I really think that you could be quite a savvy accountant and business person, just being able to know how to read a balance sheet and profit and loss. The number one report that we're going to focus on is going to be the profit and loss. I want to start with the P&L, or the income statement, as it may be called, because I want to keep the end in mind. So when I think of the end in mind, it is an overview of the business over a certain amount of time, from income to cost to net income. So for my purposes, I'm always focused on the year, month, or quarter. I'm going to head and select the last year. So these are pre-populated. QuickBooks is going to suggest these, and I'm going to run the report here. You can see once I hit last year, it's going to default to 1/1/19, 12/31/19. That's because as of time of this publishing, it is 2020. So if you're in 2021, it's going to be the previous year. But point is, you can check that as soon as you click the drop down, it should populate. In terms of how the amounts are shown, I'm going to choose totals only. But for example, we could also go months. And for non-zero activity, this isn't a big issue, but if you do want to see your full chart of accounts, meaning you want to see every category and all the zeros, then you're going to select Show All. Compare another period. We'll get into this in a second, but for now, let's just leave it blank. And then cash versus accrual. I talk about this in another video on how book to tax adjustments can be different, but also how from an accounting standpoint, you can have two sets of P&Ls or income statements, one that is based on when cash hits the account and leaves the account, the other when the services is performed. So I'm not going to get into those nuances, but I will say that for the most part, our businesses are going to be on cash, meaning that even though the default is on accrual, because there's no cash to accrual adjustments, cash and accrual are equally going to be as valuable and meaningful. So I just hit run report once that's ready. I want to make the point about cash versus accrual before looking at anything in detail. So let's just hop down to the bottom line. Net income, this number is impacted by everything above. So I have 31,017 and 52 cents. If I run it from a cash perspective, we'll see how that changes. 31,017 and 52 cents. So you can see there's no difference between that. But if you have any concerns, go ahead and run it on cash. Now, as you look at the profit and loss statement, now we can get into how we break down expenses as well as income. First, you'll always see in a profit and loss statement the income. That's what came in. From this perspective, it's going to be Airbnb payments. That's how we define sales. Just a quick point on this, that if you are an Airbnb host, you know that the number of revenue that you're earning in Airbnb is going to be higher than what gets deposited. This number, when you click into it, you're going to see that these are based on what actually hit the bank. So you can see left to right, the first date of deposit, it's going to go in from earliest to last. I don't really spend too much time looking at the in-betweens before account, but if you are to look at it, you'll see deposit, and that just tells you it's money coming in. We've made no adjustments to this. We have named these types of transaction Airbnb, so QuickBooks is going to recognize that and automate that type of connection. And then in terms of the account, this is going to 4001 sales. Now, this is an account that we ourselves created. And in fact, if you click on any one transaction, you'll be taken into the detail. And without getting too into the weeds here, because you can make adjustments within the transactions, but what I really want to highlight is how to change and modify the account on a transaction once you see something in one. So if I looked at sales and this said something, the description suggested it was something not like Airbnb, I have a chart of accounts where I've set up the type of income that may come in. So fortunately for us, there's only one kind. So I'm not going to save anything here. I'm just going to close out of that. But again, the point being that you'll see the list of sales accumulating in this account, and you'll see the amount by transaction here. And then this is the running balance. So this is all accumulating so that it ties out to our total. So sales can be broken up within a master sales account. And when we say accounts, what we're really talking about, not bank accounts, but we're talking about the account here, or the category, as we may call it to simplify it. So the category of sales is Airbnb. And if I go back to the report summary, you see that this all comes in on one line. In some cases, we'll have VRBO. We'll sometimes have off-platform rentals. In those cases, we would create different accounts to sum those types of transactions. As we move down, we notice that there's no cost of sales. There's no COGS. That is a customizable option that some clients like to talk about. Largely, we're going to have all our expenses as overhead or as operating expenses. In the case that we do want to track things specifically, and what I mean by that is that you want to track your utilities and rent. If you are doing rental arbitrage, you'll want that to be in cost of sales so that your gross profit is what you earn after your main expenses. Could you do that same thing if you own a rental property and you are putting it on Airbnb? You could. It just would need to be very valuable for you to make that change. I don't believe it's preference. I believe it's a situation where there is a need, a managerial need, if you will, to look at that number on an individual basis. So we have an account that adds up all the property expenses. We want to make sure that we're tracking this main account against everything else. You can see we've got some shipping, we've got some travel, and importantly, we've got zero uncategorized. But point being that I would say anything that has to do with the property, we want it centralized in a property expense. So all of these are sub-accounts, HOA fees, insurance. And if I take that as a percentage of revenue, you can see here that this is a non-cash flowing business if you consider the big upfront charges that are being made. So if I took this out, you'd understand that there is some cash flow, but really from a year-over-year perspective, it's the property expenses and the revenue relationship that we're looking at. You can also note that from a cash perspective, we've collected something like construction expense on the P&L. We're going to leave it here, and then at tax year end, we're going to adjust this for depreciation. So depreciation isn't showing here. I talk about depreciation detail in a separate video, but I would say step one for every business is to create a construction expense account and then let your tax accountant come back and tell you how this should be depreciated. In our case, this is a foreign property. So foreign properties are going to require 40-year depreciation. So really the annual depreciation when you plug this into a tax return is going to be 1/40th of this $27,000. So something to note when you do book to tax adjustments. Not going to get too much into detail there, but point being that we've created core accounts that are important from an Airbnb standpoint. Taxes, the property manager is a certainly important fee to track. We are looking at construction expense, demolition expense, dues and subscription, meals. You can read the list here. The point I also want to make are these subcategories. I might have mentioned that already, where we have categories related to the parent where we can say, hey, I really want to just have the full account on one line. And you can do that for every kind when you want to get to that level of detail. All in all, you can see that this business is an investment business, meaning there was a lot of money that went in, and we expect cash flow. You'd imagine as an investor, you expect that cash back over time with a rising asset value. So that's how you get to the income statement report. The other item that we want to cover is the balance sheet. So when you look at a balance sheet, it's important to note that a balance sheet is a snapshot in time. So I'm going to want to look at the last year just to keep things consistent. And what you'll get is your bank balances, and you'll also have your owner's equity at the end of the day. So when you look at this, these need to match. You can see the number down here, number up there. Point being, your balance sheet will always match, and it is going to be a snapshot in time, meaning it really isn't an average balance in here. It's really what was in as of December 31, 2019. Important again from a tax standpoint. You're going to want to break down your liabilities. That's how the second part's going to start. A business like this that's not cash flowing with a lot of debt, you can imagine would not be a successful investment. So we want to make sure we're tracking the metrics that matter. We're looking at liability. We want to know how much cash the business has. And then we're going to look at how the owner's capital splits out across the board. Now, other point to make is sometimes we want to export these kinds of reports. All you need to do is select the export icon here, which is a square with an arrow popping out of it. You hit the drop down and you can export to Excel or PDF. As an accountant, I will always recommend the Excel version so you can highlight, edit, add comments as needed. Other items you can do, there are visual settings. I'm not going to get too much into those, but again, point being, these are reports you'll provide in different formats depending on the audience. So if you're providing this to your accountant, it's very likely that they'll want the Excel version. If you're providing this to a bank, you don't want them editing. You don't want them to get a sense that it's a raw file. You'll usually go with a PDF, and you've probably seen this format before, but what you can basically rely on is that a PDF format is going to look nice as long as your categories are properly functioning and formatted. So if we say save as PDF, you'll be able to download it that way. In terms of where to see your main accounts, banking is where you're going to see how things are coming into QuickBooks. So a very important point to make that as transactions come into banks, they'll come into a for review section. A lot of people think, okay, it's in QuickBooks. That's not true. It has to make it into QuickBooks. You have to add them. Transfers between accounts have to do usually with credit card payments or cash transfers between one account to another. Those you'll want to identify. I'm not going to cover those here, but again, you're going to want to add or transfer to make sure that it makes it into the reviewed category. There are times where we exclude transactions. You can see there's nothing excluded here, but that's how you're going to navigate these three. Connecting an account is simple. It's something we can link to in the show notes below, but you're going to do that by adding an account, again, here in the banking section. And the way you would add an account is simply you go to banking like we are here, and then you would go to add account. And I'm not going to cover that here, but suffice it to say that it's a pretty straightforward process that automatically brings in your bank to QuickBooks. So again, just remember that just because it's coming in, you still need to make sure that you're bringing in to QuickBooks the transactions that are sitting in the feed. Other important points I'll make is that you have a chart of accounts, and this is where your accounts are going to be set up. So of course, you're going to have your checking and banking accounts, but you're also going to have all these expense categories that you can set up and customize based on your preferences. So you can see here where we were talking about property expenses, you can see that these are set up as sub-accounts to the parent 6,300 property expense. In this section is where you're going to edit those accounts. So for the novice accountant or the investor doing their own books, this is where you would add any category that you're not seeing. And the numbers are a good way to order your transactions. So it's not just alphabetical or haphazard. And then the sub numbers are ways to create sub-account structure. Not something that needs much talking about here, but just suffice it to say that it's important to make sure that how you've added these transactions are in fact relevant to your business and also make sense when you look at the P&L. The main categories that we expect for an Airbnb are going to be sales. And if we look for the sales account, we'll see that we've got that here. And if we did need a category for VRBO payments, we would call that 4002 sales-VRBO payment. And if I wanted to create that, what I would do is I would put it under, we want this to be under income. We are going to detail type isn't as important as the name. So we would say, and if I remember right, so I would say 4002, right? We would say something like sales, VRBO sales. I forget the exact structure, but the point is that you want this to be as consistent as possible. The number, again, 4002. Let me repeat that there. Sorry, we don't put it up here. Just put it down here. And then the description is not necessary to fill out. If I wanted to make this a sub-account, so if I wanted one sales account that collapsed, which is actually how I would do it, I would create a 4,000 sales account. I would save and close if I wanted to keep it. I don't in this case, but you get the idea of how we would make that work, right? So it'd be 4002 sales-VRBO payment. And that would show up on the P&L if there were any transactions added to that account. Other important categories are going to be contractor payments. If not, we would call them cleaning. In our case, we had construction. We wanted demolition separate from construction because we had two different firms provide it, and we wanted to make sure we were keeping track of those different costs. You'll see dues and subscriptions as an automatic account. Usually, these are going to be the recurring items that we encourage clients to watch more closely. Sometimes we lose track. I think I have AirDNA for a city that I'm not doing business in, and I've had it for something like 6 months. I'm not catching it because I don't have a dues and subscription category on my personal, but I should figure that out, right? Those are the things that are going to get caught in these types of accounting reviews. Again, meals and entertainment, legal, professional, these are going to be generated by QuickBooks, nothing that we're mad at, right? These are things that are helpful. And then property expenses. So this is on you to think through what makes sense for me. You're usually going to have HOA, insurance, utilities, repairs. Rent and lease doesn't really apply to us, but again, these are all things that may show up in your chart of accounts. And with that, we just covered basics in QuickBooks Online for Airbnb hosts. We showed you where we start on the dashboard. We talked about the reports that we like to generate and how to generate them, how we review them, as well as how to review your banking transactions, how to connect your bank, and how to edit and think about your chart of accounts. If you'd like to have a deeper discussion with us, please check us out at sharedeconomycpa.com or check out our other videos. If you like what you see, like and subscribe. We have a lot more content coming out that's going to get into more nitty and gritty scenarios. If you have questions, please leave them in the comments. And again, thank you for your time. This is Miguel with Share Economy Tax, signing off.